Assalamualaikum warahmatullahi wabarakatuh. I speak to Madam Irama Zliana. Today, we will present about the difference between conventional banking and Islamic banking or Islamic finance, and our group has choose one financial instrument, and we will discuss further about that financial instrument, the difference between conventional and Islamic point. So firstly, let me introduce our group member. My name is Sharifah Atira Said Zainal Abidin.
My name is Nurul Fakihah binti Muhammad Yusri.
I am Fatin Nadirah binti Saleh.
So first of all, I will explain the definition of conventional banking. A conventional bank is a type of bank that provides services such as accepting deposit, making business loans, and offering basic investment product that is operated as a business for profit. Conventional bank also serve the economic development without keeping the social contribution and base for individual growth, rather to the community development. Now, let's see what is the definition of Islamic banking or finance. So, Islamic banking also refers to Islamic finance or Sharia compliant finance. It is referred to the banking activities that is adhere to Sharia or Islamic law. There are two fundamental principles of Islamic banking, which are the sharing of profit and loss, and also the prohibition of the collection and payment of interest by the lenders and investor. Some of the modes include mudarabah, which is profit sharing, wadi'ah, which is safekeeping, musyarakah, which is joint venture, murabahah, which is cost plus sale, and also ijarah, which is leasing. So, there are 5 features of conventional banking. The firstly is interest-based transactions. Secondly, it is based on fixed rate or floating rate. So the floating rate is adjusted based on the market conditions without any ceiling. So, if there is a major interest rate hike, the borrower may end up paying a higher installment amount. Next, creditworthiness. Conventional bank will check their potential borrower based on the 5 C's or 7 C's to choose or ensure that the borrower will pay their loans. Next, the conventional bank borrow at lower interest and they give out loans at high interest rate. And lastly, profit maximization. The conventional bank want profit maximization without any restriction. For example, they did not take into account the riba, gharar, or maisir. Alright, now we will look at the features of Islamic banking. There are also 5 features of Islamic banking. Firstly, it is based on Sharia principle. Secondly, it is based on profit loss sharing. Thirdly, Islamic bank also avoid interest-based transaction, which is riba. Next, it is also a deposit-taking banking institution. And lastly, all financial transactions should be asset-backed.
Next, I will continue to the differences between conventional banks and Islamic banks. Okay, first, conventional banks does not deal with zakat, while in modern Islamic banking, Islamic banks becomes a zakat collection center and they also pay out their zakat. Second, conventional banks can charge additional money in case of defaulters, while Islamic banks do not have any provision to charge any additional money in case of defaulters. The third one is conventional bank has to guarantee its deposit, while in Islamic bank can only guarantee deposits for deposit accounts Thus, depositors guaranteed repayment for their funds. The next one is in conventional bank, the relationship between bank and client is called creditor and debtor, while in Islamic bank, the relationship between bank and the client is called partner, investors, and trader, buyer and sellers. The value propositions of Islamic banking. First, Rububiyah, divine arrangement for nourishment. Tauhid, God's unity and sovereignty. Tazkiyah, purification plus growth. Kafalah, social solidarity. Adalah, justice. And lastly, Akhirah, belief in the accountability on the day of judgment. There are many contracts in Islamic finance, and some of them are: first, Mudorabah, which is profit sharings; Musyarakah, joint venture; Wadi'ah, safekeeping; Ijarah, leasing; Murabahah, cost plus financing; and lastly, Bai, Bithaman, Ajil.
So nice. I'm thinking to buy a house, but which bank should I take for the housing loan? Is it conventional bank or Islamic bank?
Next, I will continue to the contract of Bai, Bithaman, Ajil. First, definition of Bai, Bithaman, Ajil. Bai, Bithaman, Ajil literally means deferred payment sale and technically means sale of contract, in which the payment of the price is deferred and payable at a certain period of time in the future. So, Bai, Bithaman, Ajil is a contract whereby a commodity is delivered immediately and the price is paid by installment. The selling price includes profit margin agreed by both parties, and the profit is not an interest payment. However, it is part of sale price.
For features of Bai Bithaman Ajil, it consists of 5 features. The first one is transaction free from payment and receipt of a fixed or predetermined rate of interest. Second, transaction that is free from element of gharar. Third, payment of zakat by the bank. Fourth, business activities and investment that is undertaken on the basis of permissible activities. And the last one is transaction operates through Sharia-compliant modes of financing. Next is modus operandi of Bai Bithaman Ajil. As you can see here, this is the flow transaction that involved in Bai Bithaman Ajil. The first step is customer identifies the house to be acquired from the owner. Second, customer then asks to the bank for Bai Bithaman Ajil and promise to buy the house from bank through a resale at markup price. This means bank will buy the house first at a fixed price, then customer need to pay the fixed price plus profit to the bank. Third, bank will purchase the house from the owner on cash basis. Fourth, ownership of the house will be passed to the bank. So right now, the house are owned by the bank. Next, as the house is the wishes from the customer, so bank will sell the house and transfer ownership to the customer at markup price. Lastly, customer need to pay the bank the markup price by installment over a period of time. So once the payment have settled, the house will be fully owned by the customer. Next, we move to the comparisons of Bai Bithaman Ajil and conventional house loan. First, for Bai Bithaman Ajil, it is a sales and buyback agreement where the bank will buy the house that customer wish from the owner and sells to the customer. This means customer will buy the house from the bank through a resale at markup price, while in conventional, it is a loan facility agreement, or we can say as a borrowing and lending term. Next, for Bai Bithaman Ajil, customer and bank more to a partnership. It can be seen when the bank share the risk with customer. For example, in the event of an abandoned development, while in conventional, the bank act as loan provider only. And then, fixed profit rate applied to Bai Bithaman Ajil, while in conventional, the price pegged against the base lending rate. Next, for Bai Bithaman Ajil, the total amount payable known upfront. It is where customer will know the exact amount they should pay when the agreement was made. While in conventional, it is not like BBA where the total amount payable known only at the end of the period. And lastly, the repayment is fixed for Bai Bithaman Ajil. It is because customer know the total amount they should pay when the agreement was made. While in conventional, the repayment varies as base lending rate fluctuate. That's why customer not knowing their total amount they should pay. Now, you know what differentiates Islamic and conventional home loan. It should be easier to identify the key benefits from each and choose the one that suits you best. There is no hard and fast rule that can help you go for the one or the other. The fact is that both the loans are available to everyone, and the choice between the two really depends on the deals that you get from the loan as well as your personal situations or objective. The best thing to do is to examine the both options, then choose one that offers you with the most suitable margin of finance, interest or profit, and what is easier for you to pay back. So now you are equipped with more home financing knowledge, so it's time to start your property search. Good luck!